What's up, everybody? Turn this off for now. How we doing? Last minute stream up, man. I wanted to make sure we had a at least give us an update live here. We got Jerome in 30 minutes. That's more important than the FOMC instant. So regardless, we're gonna see here in just a second what is going down here.
Across the United States, the Federal Reserve, through its Federal Reserve Education Program, also helps people understand how the economy works.
And again, 99%
so
chance of them
make
not
sound financial
cutting
decisions.
rates, and they didn't. They just reported that they did not cut rates.
Through this education program, teachers have access to classroom-ready online resources for students from kindergarten to college.
Remains
Videos,
unchanged,
classroom
everybody.
lessons, online education, publications.
I did not do this yet. Remains unchanged. We're going to listen to it a little bit here. I'm going to make sure that we get a little more of an update in a minute. We should post them on our Twitter as well. So if you want the full... we'll see Jerome here in a second, which is when the market starts getting a little bit crazy. Bitcoin right now, you can see some volatility. Still green on the day already. But... we'll see where it ends up here once Jerome starts speaking in about 30 minutes. We'll look into some charts while we're waiting. I got to make sure. Let me get my other chat up really quickly. Sorry. But so far, unchanged. The report was unchanged. Unchanged. I think it was pretty much, there was a 99% chance that they weren't going to cut rates. So we pretty much got what we were expecting. Not much of what we were not expecting. So we are unchanged as of now, but we'll see Jerome speak here in just a minute. See what he has to say. That'll get that volatility going. So that'll get the volatility going a little bit out of the gate, though. A little bit out of the gate. Not too crazy. Let me readjust this a bit. Make sure we... there you go. I need to get it going on vertical as well here. So bear with me. Rates unchanged. If you're just now joining us, welcome. Appreciate you being here like always. Let me get some music on in the background until Jerome speaks in about 30 minutes. But yeah, nothing too major. We are predicted that rate cut in September, so that's kind of what we're going for. That is what we are going for. We'll be watching the Jerome speak here in just a minute. I'm going to go ahead and make sure everybody in the Discord is notified. Started. I'm gonna get 1:15. We'll go 30, an hour and a half, like always. Today. How's everybody doing? I wasn't planning on streaming today, but then I just remembered, we literally have FOMC, so why wouldn't I stream? Why wouldn't we stream? But again, for those of you that don't know yet, rates are unchanged. Already got the update, and there you go. Boom, rates unchanged. Go like and retweet this if you want to notify anybody that is following you. I think they're just running like ads or something. Yeah, they're just running whatever they want to update you on certain things. We'll go over some of the charts while we wait on Jerome as well here in just a moment. Sorry, I just jumped on really quickly to get the update here. 1 second. All right. What's up, Dame? How we doing? Are you watching it live? Yeah, you're not supposed to hear that yet. It's just, these are just ads running, pretty much. It's just ads running. We're waiting on... We have Jerome in about 25 minutes. So that's when it's really going to kick in, the volatility there. So we'll wait on that. We'll wait on that to play out. Just let me make sure really quickly that the capture for vertical is working. 1 sec for the live stream. So 1 second. I'll get you guys fixed here. For the vertical stream, just 1 second. How's everybody been doing that? It's an interesting day. It started off nicely and then kind of closed down a bit. There you go. All right, we'll hear Jerome here in a little bit. I'm going to just make sure vertical's got a little bit of a view as well. There you go. All right, bet. Rumble Ron's back in the house, man. Good to see you. Appreciate you being here. Markets are bouncing back there. I mean, it was predicted, guys. It was predicted to be where it's at, so that's good. Nothing was a shocker, right? Man, they were just rolling with some random stuff. Is there a chat room platform where the HODL gang there, Hamid? Is that what you're trying to say? HODL gang? Yeah, man, just join the Lux Algo Discord, man. Yeah, let's get into it though. Oh, did this save yesterday? Yeah, it did. Guys, again though, if you want to be updated in real time with everything going on in the market, just make sure you follow our Twitter. Also post some funny crap like this. That's pretty good. Imagine if she was the head of the Federal Reserve. Oh, that'd be good. Yo, what's up, Mike? How we doing? Dude, y'all could hear that music, but I literally can't. My headset's so jacked. I could barely hear it. I know it's loud for you guys, though. That's so weird. Hopefully I can hear Jerome. The live stream, for those of you that are wondering, is on the... that's so weird. I literally can't hear it. I wonder if I'm not gonna mess with it. It's like so dim for me. But again, guys, we have Jerome speaking in literally less than almost 20 minutes now. Give me 1 second. We doing good. We doing good. Hair's a little messy today. I didn't have a chance to. I have this weird, early on, crappy, spiky hair before my hair starts getting long, and then it starts really working. At first, it just looks like crap. Markets are bouncing though. NQ and the ES after that little sell-off there, bouncing back already. Rumble said, Mr. Jacob, you changed my whole view on trading. I've been going very good since I got stuck at ton and started watching how you approach trading. I'm now 25 days in win streak. Dude, congrats, brother. I'm happy to provide the knowledge to help you be successful, man. At the end of the day, guys, it comes down to simplicity. You don't want to make it too complicated. Again, it's like we were talking yesterday. It's all common sense. There's a lot of common sense involved in trading. The more complicated you make it, the more likely you are to lose at it. Again, if the market is telling you that it's not going in your direction, right? I mean, you got to think of it as simple as possible. It's like, if I was in a long trade, let's say on here's a great example. If I was in a long trade on Bitcoin, right? If I was in a long trade on Bitcoin off of here, right? And I was like, okay, I'm looking for, price to break to 67. Price breaks out and then immediately shows no support, no structure. In order for price to continue, it would have had to respect this previous high, right? Price never respected that. It never bounced off of it. It had this closing candle here. There's no reason to hold on to that position, right? It's just, you should just close out immediately. The minute you can take those losses early is always your best bet. Hoping for recovery is going to kill you every time. Hoping for recovery is going to kill you every time. Dude, this audio thing's messing with me. Give me 1 second. I'm gonna mute the main audio in the background. I really want to fix this. It's driving me nuts. I think I have to do it on my. I gotta unplug my headset. Hold on. Hopefully that shouldn't mess with you guys. I literally can. I'm not used to it. It shouldn't be weird for you, but it's weird for me. Oh, there we go. All right, I can hear it better now. Bet. Much better. Much better. Guys, rates unchanged. Again, we said yesterday, 99% chance of rates being unchanged. And guess what? That's exactly what we got. We said it yesterday. I mean, again, the first rate cut has always been talked about being in the very in September. September was where the rate cut was probably going to hit. Yo, Glacier, I appreciate that, man. So we're going to be waiting around for September for that rate cut, okay? Be ready for it. Jerome speaks in less than 20 minutes, about 18 minutes. Jerome's going to speak. We're going to listen to it live here. I'll shut up at that point. I guess while we're waiting, though, we might as well do a quick little bit of analysis here. I would highly suggest if you're in any positions that are leveraged, aka you're in binary options, you're in 20x leverage on Binance, or you're trading any type of future leverages, I would highly suggest, unless you want to gamble, closing that position within the next 10 minutes, okay? I would suggest if you're in a smaller loss because the market bounced back, take it. It just, trust me, after the fact, we should be good, right? You should be able to reposition yourself after Jerome finishes speaking. A lot of the times with Jerome, what's going to happen is market's going to go back and forth the entire time that he speaks. The market's going to be very volatile the entire time he speaks. The minute he stops speaking, it will pick a single direction and it will continue to move in that direction. I've been watching FOMC for like 10 years. The same majority of the time, the same thing happens, especially when it's unchanged. Unless somebody slips a question to where Jerome doesn't know how to answer it and answers it poorly. That's something where it's like, you can't predict. But a lot of times, this guy's a veteran at this crap. So he's pretty much going to dance around and only say what he is obligated to say. He's not going to try to assume anything. He's just going to give you the straight facts. Yo, Chuck, welcome to the Huddle Gang, man. I appreciate you joining. Welcome, brother. Everybody, welcome Chuck to the Huddle Gang. Let's go. Chuck, welcome, brother. Appreciate you joining up the Huddle Gang. He locked in some extra entries to giveaways when we start to do them again. For now, I'm just trying to get back into the streaming groove as I just had a baby. But welcome, man. I appreciate you. Yo, Adam, thank you. I appreciate that, brother. I appreciate that. All right, let's get into Bitcoin, guys, really quickly before Jerome hops on here. We have about 15 minutes before he drops on. Now, again, yesterday we talked about how the overall volume in this current range that we've been in, even from that move from 42,000, has been sitting right around 68, 67K. That's something that we're continuously watching to make sure that, it does want to hold. Now, with Jerome speaking here in just a little bit, we could see a difference in movement here, whether it's going to be lower or higher. As of now, it's nice to see that rates are unchanged. If you didn't know that already, rates are unchanged. We pretty much, said it was going to be yesterday, the exact same thing. Federal Reserve notes, here you go. Further progress towards committee's 2% inflation objective. Inflation mentions have softened to be somewhat elevated. You know what? Let me see here real quickly. Hey, BK, are you in the chat, BK? Can you respond if you are? I don't think he is. I think he was. Yeah, she's here, man. See if he's in the chat. I want to look at something real quick. But Bitcoin right now sitting below that high volume node there. As you can see, majority volume is ranged off right here, right? Is ranged off between the 63 and the 68K mark. 70K has been, roughly that cycle we've seen, right? It's been in and out of that 70K, keeps tagging 70, comes off. Makes a lot of sense, right? We're not too worried about it if it's going to be trading above 60. I mean, I think it's, if this thing trades above 60, and according to FOMC as well, if this trades above 60 up until that first rate cut, you'll probably then see that mega move when the rate cut does come. But I will say I would rather it break all-time highs, but I think it can before September. So we'll be keeping an eye on that. Remember, the end of this year, going into 2025, the cycle is planned on if it goes accordance to the previous cycle. Yo, Dennis, what's up, man? We were here yesterday. I guess you just didn't tune in. I appreciate you tuning in, bro. Can you now say, Jacob, you are the god? I should have held my Solana, or if I did hold it, thank you. Please. Dude, Dementia, I remember you, man. I remember you, brother. I appreciate you tuning back in. I really want to look up. Okay, I don't think BK's here. BK's manning the Twitter right now. He's going to make sure we got everything going on. Something froze there. Why is that freezing? But, gosh. Dude. FOMC back at it already. Why do I not know how to do this? Hold on. Why can't I? Hold on. I need to look up something really quickly so we can talk about it. I don't know. All I know how to do is on mobile. Where is that button? Yeah, am I dumb? I'm dumb. I gotta be. Yo, guys, seriously, where is the search button on Twitter for mobile or desktop? Where's the search button? On X or whatever you want to call it. Like, why can't I find it? On mobile, I got it. This is weird. Top right? Yeah, but I know that. But like, does this search the Lux Algo Twitter? That's what I'm saying. This doesn't search Lux Algo Twitter. So if I type in like FOMC, right? It doesn't. Like if you go on, you have to type in the from. You add from. Oh, so you have to add it yourself? BK, do you have the last CPI report since you're in here now? Can you just send me the last tweet about CPI? For that 2% target? Can you send me that? Is your name Lux? No. That'd be kind of cool though. I'm gonna name my next baby Lux. Might as well. Going for a third. Yeah, we're updating everything on the Twitter there. BK, you don't have to do it right now if you're looking for stuff on for the FOMC for now. But just keep an eye on the Twitter that keep you updated with everything going on as well. Okay, here you go. Aha! Yeah, this was the 11th, the day after my daughter was born. So I need to catch up. I need to catch up. Okay. So it was okay. I remember this now. We had that drop, which is good. You know that we're on track for that 2% mark that we've been looking for, which is good. So yeah, I just wanted to see if we had that beat or not. Sorry, I'm looking at my stocks as well. They're kind of just chilling, aren't they? Okay, let's go ahead and get into Bitcoin analysis again. We just got about 10 minutes here anyway. So, okay. So on the daily there, as you can see, that high volume area is plotted around that 67,500 level. I mean, I honestly, Higher low coming in on the 4 hour. That's good. Let's go to the weekly. The weekly was playing nicely because we were watching the... Did I get rid of that? I got rid of a level. That sucks. Did I? It was on tether? It shouldn't have been on tether, but it's fine. We'll do it on tether. Yeah, so we got the 65,300, 65,500 coming from that weekly open close high over here. I really wanted to see this thing hold this week. You know, we got a little bit of room. The closing, what was the closing price? Closing price 65,500. Yeah, so that 65,500 is pretty much what you want to see and potentially close over this week. Obviously, you can see we have a low of 65,300, which is really good. Already tagged that and now trading above it. Today's kind of going to determine where we're going to head from here. Potentially for the rest of the week on this weekly close. I would like to see if we can, don't freeze on me now. I would like to see if we can get up through 68K, or even retest these open close daily highs around 68,300-ish. Especially if we get a daily close similar to what we're seeing now. We'll see here in a minute with Jerome. Again, if you're just tuning in, we had rates unchanged. I'm going to go ahead and actually do this. Pin. There you go. Make it easier. So yeah, bouncing right off of that 65,500 again today, which is really good. The low today was 65,500, almost on the penny, guys. 65,496. Yet again, those weekly levels always coming into play, always important, right? So I love the high low coming into play here as well. Let me take out the money flow profile. So you can see we did have a bearish change character form with a breaker the other day. This is going into Monday from Sunday after breaking that swing low. So I will say on the 4 hour price action is a little more bearish than it is bullish, but you know, we have been in a very strong consolidated period here on Bitcoin for a while. So I do, if anything, if we were to come down off of this level and not close this week over 65,500, first stop is going to be roughly 64. Looks like 64 seems to be a price. I would even give a little bit of range between, I didn't even realize this. You guys are frozen. I'm literally talking and you guys don't see squat. What's happening? Oh, let me fix this. Hold on. Oh, that did freeze. Hold on. How long has that been frozen? How long has that been frozen? Why didn't anybody say anything? 35 minutes? Okay, so it hadn't been long. There you go. That would have been bad. Since I changed the tether? Okay, sorry. All right, here we go. We're back. Okay, so again, as we were already saying there, I mean, it doesn't matter. We're going to get some interesting volatility here in a minute. We've got about 7 minutes until Jerome starts speaking. You'll see him pop up on the screen here in just a minute. So again, that 65,500, like I said, the daily bounced directly off it. That's what we wanted. We'll see if it ends up to go retest the 68,300 area. But as I was mentioning, the money flow profile, the daily there is sitting directly at that price. So we're trading below it right now, but we're holding a weekly level. So holding that weekly level is super nice. I just want to see if we can either go to retest 68,200, or the biggest concern right now is if we break that 65,500, I do think we will probably retest this area here. I'm really going to be watching from these highs over to these lows here. So, you know, simple as that. Nothing too crazy. We probably get some volatility right down to that price, 63,700. So keep an eye on that. Oh, y'all, you're good, guys. As long as it wasn't that long, we're back. It's all good. We're here before Jerome anyway, so it's good. So yeah, watching to see if that 63, 67 price is going to hold up would be really, really nice. 63,700. So keep a close eye on that and you kind of go from there. But you can see here we're kind of peeling over a bit already here on the 4 hour with Jerome in about 5 minutes. Again, rates unchanged. For those of you that don't know already, that CPI is still on target for that 2%, which is good. So we'll see kind of where we're heading from there. But again, it was predicted regardless, guys. There was a 99% chance that we were going to have unchanged rates. So we pretty much got the okay for September. I mean, September is probably going to be when it happens, when we get that first rate cut. Makes sense. You know, that's been the plan this whole time. So going from here, let's go take a look at gold while that hit the market. Gold on the daily, very bullish today, up $12. Pretty good move on gold, honestly, $12 move. And if you don't recall,
who's your daddy? Who's your daddy?
I mean, you can call me daddy at this point if you haven't already. If you're on stream yesterday, hopefully you listened up, because we pretty much told you that if we close on a very nice 4-hour close above this swing high here, this lower high here at 2,400, we said we were going to go hit 2421. That was our upside target. You can't. I mean, that's why you tune into the live stream. That's why you get your notifs on, baby. That's why you do it. Just hit the notifications, because you can't get better gold analysis than that. We literally smashed that target. Our other upside target was what? 2427. 2427 was the other upside target, and that came from this previous daily high right here. And again, we have freaking obliterated it. That was a high of 2429. So again, great job if you're on stream yesterday. You caught that move. Then there's about 1 billion requests for gold yesterday, and I told you over and over, so you shouldn't have missed it if you're on the stream. But again, swing high target obliterated. Great job. Great job. Again, though, the other crazy thing, Tesla yesterday dumping a roughly 5%, and then today completely gaps up, rallies back through yesterday's high. I mean, you can't make that up. You can't make that. Was absolutely insane. Like talk about a V, man. This thing found a bottom off 220. I mean, lock in at 220 regardless. Goes right up, hits 235. Major moves. Unreal. Luck's name is Jacob. Goodness gracious. Is it more likely to go up for the FOMC? Well, FOMC just dropped with unchanged rates, which was pretty much that was what was predicted. It all comes down to Jerome himself now. Jerome is in charge at this point. He's going to tell us what's up. He's going to give us the okay on whether we're going to be rallying or not. So that's kind of what you got to wait for here. We have him in literally 7 minutes. We're going to listen in here as well. So really keep a close eye on, close ear, I guess. Here in a second, we'll listen to it. Sorry, dude, what is going on? Everything's just glitching right now. Everything's glitching. Probably because of FOMC. Again, guys, if you, I promise you, your best bet right now, my friends, close anything you're in. Just close a position. If you're in anything, close it. You don't want to fight through this volatility. Anything that's leveraged, close it. If you're trading binary options, you're trading, unless it's like you're holding leaps on, the options front. But a lot of people are trading high volatility leverage right now. So just be careful. Please be careful. It's not, when he speaks, it's just going to rally back and forth pretty aggressively until the end of its speech. Just booked a short on Bitcoin. Through Bitcoin, what's my target for the bull cycle? I mean, we've done that on stream a million times. I did 100x leverage 3 days ago. That's what happens when you vanish on me. Yo, you didn't. Hopefully you made money. Praying you made money. Yo, what happened to... Hold on. What happened to my... There it is. I'm going to say, what happened to my price action constant? We're going to see here in just a minute how it goes. No, you lost it. You got liquidated. Okay, nice. Please tell me you're still holding Solana, though. Man, the amount of times I told you to buy it off 136, the amount of times I told you to buy it within 120 and 136. I mean, come on, man. Majority volume sitting down there, too, still. All right, we got Jerome here in 1 minute. We should see the live kick on here in just a minute. We'll be listening in on that. So get ready. Yeah, 200K of sold you. Let's go. BK coming in. BK, we're going to listen to it, by the way. We're going to listen to it. Looking for a rip long on the NASDAQ. Let's see when Jerome speaks here. It's already rolling here. There's NASDAQ 5-minute. Let's do side-by-side NASDAQ and the NASDAQ and Bitcoin. There he is. Everybody shut up. Here we go.
Good afternoon.
Every time.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing
Just put a poll up.
Developments.
Will J. Powell dump or pump
Recent
the market?
indicators
Vote now.
suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance.
Biggest thing is waiting for the questions. Questions
Payroll job
are
gains
the important
averaged
thing. Questions are the important
177,000
thing.
jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but
Money
remains
flow
low
settings are
at
default,
4.1%.
and then added
Strong
heat
job
map,
creation
profile
over
heat
the
map.
past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%.
J. Powell Pup.
Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys.
Can you guys hear him
of
pretty well?
households
Can you hear him
and
pretty well?
businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting We know that
Gold
reducing policy
ripping
restraint too
up
soon or too
$17
much
now. Gold up
could result
17.
in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves,
Gold hitting
monetary
daily
policy
target
will adjust in order to
24.27
best
as
promote
stated
our maximum
yesterday.
employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential.
Like we
to
said,
achieving
guys, again,
maximum
volatility
employment
is going to be
stable
back and
prices
forth when he's speaking,
over the longer run.
especially when he
Our
takes
success
questions.
in delivering on these goals matters to all Americans. We understand that our actions affect communities,
Once he
families, and
stops
businesses
speaking,
across the
markets
country.
usually pick a direction
Everything
and they
we
take
do
it for the rest
is
of
in
the day.
service to our
So
public
watch that.
mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here we go. Question time.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable
said it first.
expectation, and if so, why not just make the move today?
Thank you. So, on September, let me say this. We have made no decisions about
Do you
future meetings, and that
remember?
includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be
Me too, sketch.
whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a
Smash
solid
that like
labor
button
market.
if you haven't already.
If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
He's such a robot. He's so good.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way.
NVIDIA leading the storm.
I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly,
12% on NVIDIA today.
Expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not
Gold going for the
confident right
breakout.
now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. we just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would
Remember,
cause
last
us to
CPI
gain
reading
more
was really
confidence.
good.
Colby.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any
gold's
better
making the
forward
move
guidance
first.
on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting.
Gold
I would
24.30.
just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today.
September.
I've said what I can say.
I think
about
we'll get at
September
least
and
one
about-
this year.
about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data
Sketch,
broadly
if
show
you want to
in
see the
labor market
NASDAQ,
is
go to the
an
main,
ongoing,
go to the
gradual
big stream.
normalization of labor market conditions, and that's what
Go
we
to the
want
other
see.
stream.
We've seen that over a period of a couple of years, and a move really
there's
from
2 streams on
overheated
YouTube.
conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market
Dollar
than what
coming
you
down.
would expect, does that
As it
change the
should.
calculus on what you're looking for out of the inflation numbers? to,
Dollar's in a great spot.
recalibrate
Dollar's
policy?
in a
we have-
fantastic spot.
Growth isn't one of our 3. We have 2 mandates, as you know. The labor market,
Great
maximum
spot.
employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now
in a
we're
great
back
spot.
to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared
Remember
to
that
respond if
NASDAQ
see
zone
it,
we
that
drew,
it's-
guys?
that it's
Remember
not
on
what
the,
we
from
wanted
the
to see,
Fibonacci
which
on the
was,
weekly.
a gradual normalization of conditions if we see more than that. And it wouldn't be any one statistic, although, of course, the unemployment rate is generally thought to be a good single statistic.
between the
but we'd be
618
looking
and
at
the
wages, we'd be
50%
looking at
retracement.
participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are
Unreal.
close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%.
NVIDIA,
So we don't think, I don't now
13%
think
today.
of the labor market
13%
in its
on
current
NVIDIA.
state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite
We
there
saw
yet,
Nancy
but
Pelosi
we're
buy
more
10,000 shares on the
confident
dip.
that we're on a sustainable path
Crazy.
down to 2%. So those things,
Crazy
two things
buy
are
by
working
her.
together, and we're factoring those both into our policy.
Chris.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not or would you consider preemptive cuts to prevent, if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low.
Still 24.30 on gold. It needs to break that high.
Is that sustainable?
High is 24.32.
Something that is worrying. Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good.
It barely broke it.
ECI reading was a little softer than expected. So that's a good reading. It shows that wage increases are still at a strong level, but that level continues to
fair
come
value gap
down
sitting there as well
to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant
Bitcoin
movement
reverting on
in
the 5-minute.
We're very mindful of this question of is it just normalization or is it more?
Again, though, that daily candle above 65,500 is key. Let's watch that.
To support the labor market. At the same time, we're seeing progress
this
on
green
inflation.
bar right there, 65,500.
We actually got to this. We raised rates a year ago at the July meeting, and if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, as I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's time. It's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about
Remember,
all the time
tomorrow,
is how do we keep this
tomorrow,
going?
guys,
this is
tomorrow,
We think
we have 8:30 a.m.
100% focused on inflation because
Bank
of the
of Europe
we've made.
interest rate decision.
12-month headline,
and we have
2.5,
PMI
2.6
for S&P and ISM. So
the job is not done on
crazy
inflation,
earnings
but
after hours. Friday is going to be nuts because we had that job report an hour before open. But then on the back of Apple earnings, Amazon earnings,
what that looks like,
and Intel earnings, so it's going to be interesting.
You would think in a base case
tomorrow and Friday is going to be just as crazy
from here. But I don't want to try to give specific
Bank of England
forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's
Bank of
highly
Europe.
uncertain.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year,
you can usually assume,
by
the way, guys, where the NASDAQ and the rest of the markets might go based on how it performs the week before.
At an unsustainable rate.
We had two very large bearish weeks going into FOMC, pretty much dialing in
We're also
for a really nice bounce.
in the other two big categories, non-housing services and
really
housing
nice
services.
bounce.
So, so the thing is, you've got 1 quarter of that. We had 7 months of low inflation.
There's your
You got
weekly on
1
the
quarter of this.
NASDAQ.
I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data.
Unchanged, Devil.
And things like the ECI report, and frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense
Tesla,
now
233.
that there were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months.
Positive right now.
Because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably under 2%, but we need to take note of that progress, and we need to weigh the risk to the labor market.
Guys, Bitcoin Weekly,
if
we could flip green
more equally than we did a year ago.
We might test that all-time high coming up.
Michael McKee from Bloomberg.
We can flip green by Sunday.
I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the State Law Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away.
Current Fibonacci retracement on the 4-hour there. Bouncing off 618 and weekly level of 65, 500.
Has come down. And
also
I think
in a large peak volume node, so
as the labor market has cooled off.
Pretty nice volume here.
Now, labor market has softened. Probably the inflation. Inflation is probably a little farther from its target than is the employment,
67.
but I think the downside risks to
no rate
to
cuts,
the
Charles.
employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive
usually speak for 30 minutes, I think? I always forget.
It's been the rate we've had in place
usually
for
30 minutes, 30, 45 minutes.
And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our
I think
business.
it just depends, honestly.
So,
I've seen it pretty long.
We get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just and then how's that affecting the outlook and how's it affecting the balance of risks? That's going to be the assessment that
Antonio,
we do.
no
Of
day
course,
trades, man.
We'll
Just
all look
some
carefully
swings.
at the employment report, but so much other data coming in and so much happening
How's
between
Solana
now
doing
and
on
the
this?
September meeting, and we'll make a judgment.
Edward. Thank you, Mr. Chairman. Edward Lawrence, Fox Business. I do want to dig deeper on what Michael and what Nick are
Look at
asking.
that chart.
There's a shift in the statement
That's
to
insane.
balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading
Gold
creator.
broke out.
Could the government jobs as a sector hiring
New
mask
high
underlying
from that
weakness
daily
in the jobs
lower
report?
high.
Well, we'll look at everything.
2434.
We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports, last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got another quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin.
Rumble said,
to dial
Jacob,
back
before happens
restriction,
in Iran and
but we're
Israel,
not
for
quite at that
example,
point yet.
Bitcoin dump
We wanna
size
see
pump
more
often
good data.
when war happens. It dumps.
The decision was
war is
unanimous. All 19
always a
participants
bearish
supported it.
sentiment. But that means
there was a
gold
real
is
discussion
bullish.
back and forth of what the case would be for moving at this meeting.
Majority of the time they move it in.
A
People move their
strong
money into something
majority
like gold,
supported moving,
silver,
not moving at this meeting. That was the strong
Bitcoin's
sense of the
interesting,
committee,
man.
but
It's a
conversation that we
middleman, to
had
be
today.
honest. It's a
Certainly.
middleman. Bitcoin just does what it does. It's slowly moving closer
Courtney Brown from
to
Axios.
U.S.
Thank you for taking
style
our
trading.
questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were
Again, we had a
questioning how
great
restrictive
CPI
policy was.
report.
Look at the labor market now. You can see, and look at it. Look
Back
at
on
inflation,
July
sort of
11th,
rate-sensitive, interest-sensitive
So
spending.
we're
You really do
we're
see
getting
now
there.
that
We just need to
policy is
continue to
restrictive.
see
I wouldn't
good
say it's extremely restrictive.
good
but it's
reports,
certainly
and
effectively restrictive.
we'll probably
Yes,
get that
they're-
September cut, or maybe
the lag
earlier. Just
should be on the way down. It should take some time to get into.
But again, it's already
to get into the full
August,
economy,
right?
affect
So
financial
we're 2
conditions, and
months
that affects
away.
economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that.
Again, guys, if this price holds where it's at,
it's
going to pick a direction. As soon as Jerome's done, it'll pick a direction, and it's going to move that direction the majority of the rest of the day.
Don't want to go too late.
Usually.
But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria. Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing.
This applies for all markets, man. All markets.
And we're watching carefully to see
gold holding knife.
If it turns out to be more. If it starts to show signs that it's more than
guys,
that.
you want to see multiple
we're well positioned to
price
respond.
charts. Join the other stream if you're on mobile. Get off mobile. Go to the other stream.
I think
There's 2 live streams.
History doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be
He should be
just the
finishing
same.
up here soon.
An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation.
Dixie
really
has some room to the downside. 104
so much
even.
Of this inflation came from the shutdown of the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Amara.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously?
BK, why aren't you there asking questions?
And labor market are cooling much more.
BK, why aren't you in the audience?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in
BK Lux Algo
districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or a really bad economy. It's one of there are spots of weakness.
Gold is
in
moving,
the regions
man.
where growth is stronger than other regions. But overall, it's again look at the aggregate data.
It's just holding.
Aggregate data is particularly PDFP, private domestic.
Yeah, it's possible, man. There is still a possible dump after this, guy. So just don't think it's just going to continue from here.
It does.
Again, we've stated this before. FOMC can be choppy, even if it's moving a single direction during him speaking.
It's very hard. GDP data can be
volatile. It can be choppy
quarter to quarter.
We could see price completely come right back off the minute he stops speaking.
There are a lot of. It's just difficult to do. So I look at both. But I
just
wouldn't
be
say
careful,
that
please.
that
if you like your profit, if you're in profit or something on some trade that's leverage, take it.
Thank you.
Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table,
On what, brother?
it would be less than 2 months before the
What do you have a
election.
10K
and former
order
President
on?
Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be
I
doing.
wouldn't trade it at all.
What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
Yeah, wait, man.
I absolutely do.
I wouldn't
and I
do
think
it, no. Now
First
is
of all,
not
we
the
haven't
time.
made any decisions.
Now is not the time.
I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down.
It's
much closer
gambling.
to our goal.
FOMC is
And that's
gambling.
happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster.
Let's wait till he's done speaking, and then we
that
can
state
see.
of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be.
I hope he,
You know, we're
Sometimes
using
he'll
our
speak
best
through
thinking.
market
We're-
close.
we're
I just
doing
hope he
our best to understand the economy. We follow academics. We follow the many commentators who bless us with their
I agree,
commentary.
Dimension. I agree, brother.
But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support
After
or
he
oppose a
speaks, I
political
could see
party, a
this.
politician,
I
or
could see
any
the
political
Nasdaq
outcome.
settling back. To be honest,
The bottom line is,
like
if we do our
19,400 or
very
something.
best to do our
We'll
part
see.
and we stick to our part,
We had it. I mean,
that will
such a
benefit
lovely
all Americans.
pullback
If we get
before
it right,
this.
the economy will be stronger.
Before this
we'll have
FOMC,
price
so
stability,
seeing that
people will
pull
find
back and
jobs,
price bouncing
wages
today
will
makes a lot
rise
of
in real
sense.
terms. Everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will
I mean,
will
I'd
be
say
based
600 points on the
data,
Nasdaq is a
the
pretty
outlook,
good bump, man.
and the balance of risks, and
I mean,
more than anything else.
NVIDIA driving.
Just a quick follow-up. Do your economic forecasts and models
He should
take
be done
into account
soon, by the way.
two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No.
You don't long
not
gold
do that.
now, man. If you're
We
not already
absolutely
long
do not
gold,
do
then
that.
no,
We don't
long
know
it.
who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically, we have our forecast. We're not, we can run simulations.
You'll never hear me
of
say soul bear
different
case,
potential
Dennis. I'm
policies,
sorry.
But we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Smart.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting
Thought
vote
that'd
on
be
an
it.
interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and you know, we talk.
Do you think
a
you have to
lot
wear a
before,
suit
during, and
to
after
this
the
meeting?
We do have a very
Like, could you show up in a
robust
hoodie
discussion
and
of
ask
these
questions?
things.
Like, is that
You're
possible?
Right, that in
If you
most
have
cases,
access?
People, if they feel heard and they feel that their their position has been
Jacob
given serious
looks out, go,
consideration, for
"Yo,
most people, most
Jerome,
of the
I just
time,
wanted to say,
that's going to be enough. There are
You're
dissents.
doing great,
That's
bro.
fine.
Gold.
You know, no one has a veto.
Gold broke out.
You know, no single person.
Let's
has
just
a
end it
veto.
here.
So it just is a question of who will vote for and
Just want
against.
to say,
we've had
not a big fan of you, but you pumped the
dissents.
market today, so we'll take it.
We haven't had so many during the pandemic era.
Daisy
and it just
Dukes
may
and
be
flip-flop.
that we've felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
There we go.
Jean. Hello, Jean Young with M&I Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
And
Jennifer.
Fire's
haven't
back.
made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around.
Keep it in your pants, Republic.
This morning we have the monetary policy go-around. And I think in people's economic
Hey, I
go-around and in
appreciate
their
that,
monetary
TJ.
policy go-around, people express their views.
Republic man's getting
about
off from
and
this.
there-
I
there's a
should turn
range
it
of
off.
views. People, as
Keep
you
it in
will
your
know from
pants,
the speeches
brother.
that they give,
Yeah,
people have
man.
different ways of thinking about the economy. And so in the minutes, we'll lay this out in a much better way than I can do off the cuff.
So Rumble, you
But
just
there's a
can't. You
range
can't
of
do anything
perspectives,
until he's done
and,
speaking.
But I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly, the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how
Man,
the data
Bitcoin
come in.
held that
But there is
5-minute
a growing sense of
retracement.
confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question, that is the case. That, as I mentioned, we think that the time it's approaching, and if we do get the data that we hope we get, then
Wrong question,
a
Republic.
reduction in our policy rate could be on the
Man,
table
say
at the
gold
September
bull
meeting.
flagging, bro. Gold could be doing the biggest bull signal of its life, but
Hi,
Jerome
Chair
could
Powell,
say
Nancy
something and
Marshall,
it would
Gainesville
completely eliminate that.
Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month.
Republic,
which
you into that?
Probably saw, in which he said, quote,
You into
"It
Nancy
might already
Marshall?
be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too
Rumble's
soon
like-
against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation.
Guys.
We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it
Again,
needs
though,
to,
guys, remember,
cool
jobs
off
report
any
on
more for
Friday.
us to
It's
get,
going to keep us updated as well
the
with
inflation
how this market's going to end
results
up on
that
the
are
week.
related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see
What a weekly candle,
which
though.
way the economy heads, and I think if we are to respond to weakness, we're certainly well equipped to do that. But
Gold
that's
coming
not
off
what we're
the
seeing.
high.
What we're seeing is strong economic activity and a good labor market and inflation coming
Nice
down.
extension, though. 50% lines up at that previous high. But TA's not as important.
Thank
right
you
now.
so much.
On gold.
In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not.
Bro, he's been doing this for 3 presidential terms,
have
bro.
a good sense of that. Is there
Yes,
anything
he's
you
a
can
god.
say,
He's a
like,
god
how
at
will we
just
judge
going
that?
around the questions
Yeah,
and getting rid of them, man. He's so good at it.
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, when you're saying you're going to be data-driven.
How many of y'all think
of course,
this
it's
is
always
real, by the way?
The data, how they affect the outlook.
You think
and
this
the
man
balance of
really
risks,
makes
but,
only $200K a year?
Nobody has great vision deep into the future.
Bra.
In terms of a reaction function, that's a long time
that quote. I love
discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
He probably argues the same way.
The last question.
Last question. Come on,
Thank
baby.
you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency. And wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector. Both as a convener and as an operator too. In terms of a CBDC, there's really nothing new.
We don't want that. No, bad.
We don't want that. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating,
we don't need
the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial
this guy
down
comes
the road.
in, types XRP.
But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea.
They want to do a central bank digital currency. We don't want that. And that concludes the FOMC talk with Jerome Powell. Thank you, sir. Markets are up. Great job, Jay Powell. We appreciate you. Thanks again. Man, oh man. Finally. He went 18 minutes past that 30-minute mark. Man, that wasn't too bad. All right, now let's see where markets head, because this is where it gets a little crazy. This is where it gets a little crazy. Markets will pick a direction now usually and make its move. Gold already breaking out. Let's go gold. Let's see what the Nasdaq is doing. Yeah, Bitcoin went a little sideways. Bitcoin, it's not as important, for Bitcoin. Bitcoin's going to do what Bitcoin's going to do, right? You're going to see a little bit of volatility in it, but let me see. Okay, well, this guy is very off topic. Gold pumping right now. I got a gold pumping and the Nasdaq coming back down. Like I said, guys, 2,400 I think it could touch again. I think the ES or the NASDAQ could touch, 19,400. Watch that here shortly. You said gold bull flag, dude. You're nuts. No, I mean, you can't predict that. Remember, guys, though, Wednesday or Thursday, we have the Bank of Europe. I said Europe again. I was trying to correct myself. Oh my gosh. Bank of England interest rate decision 8:30. I said it again. So that's what happens when you're born and raised in the U.S. and that's all you are grown up to know. You can't even say that correctly. Either way, interest rate tomorrow 8:30 a.m. We'll see if they change anything. I think they already had a single cut this year. I think they had 25 basis points earlier this year. Yeah. We got jobless claims 8:30. You got PMI 945. Big news day tomorrow, as well as earnings after hours, Apple, Amazon, and Intel. And then jobs reports big as well. Again, here you go. Like we said already, it doesn't make its move until after. NASDAQ coming back down. Bitcoin. Somebody just said Bitcoin dump. Okay, come on, dude. This ain't no Bitcoin dump. Crypto dump. What are you talking about? Dennis, you happy you didn't take that trade, dude? You better be. Better be happy you didn't take that trade. I thought BOE has cut rates. Europeans gonna be angry that you mix them up with England. Let me ask our head dev. I'm sorry, Logan. I'm sorry, Grover. You enter. Oh, EBC. See, look at me. ECB. Look at me. Messing things up already. Nvidia back down 12%. I mean, absolutely insane. Gold is ripping, man. Gold 4,400. Let's see, does NQ hit the price target I was thinking? Probably not. Bouncing already. Good sign. All right, guys. Let's do about 9 more minutes here. He said, educate yourself, GIF from BK. Here we go. There we go. Here's your cuts. China cut, Canada cut, ECB cut, Mexico cut, Sweden, Switzerland, Denmark, and Brazil. Yeah. There's all your cuts already, so we'll see if we get any cuts. That's funny. Gold so nasty. Gold is ripping. I may or may not have pulled it. I'm assuming that's a no. All right, so those of you that said pump, I guess you win that one. Pump is the winner. Great job. Well, I guess for gold and the ES, I mean it's at highs. They're in the NASDAQ. But again, remember tomorrow we do have, all currencies look like they pumped. Dixie was dropping, so Dixie, there you go. There's that 104 we just discussed a minute ago. 104 on the Dixie. Will gold dump again? Yo, what's up, man? Gold's looking good. The Dixie's dropping, so makes sense. Yeah, the rest of the markets are, struggling a bit. NASDAQ coming back down a bit. But look at the NASDAQ on the daily. Doing good. NASDAQ on the daily, if it closes, guys, over that 19,377 high, that'd be nice. We're going to be streaming for about 7 more minutes, and then we'll call it. Again, I'm going to come back as I can. I have literally a 2-week-old. So I can't be streaming too long, but we got the FOMC Bitcoin. Let's look at it again. Bitcoin retesting 66. I mean, let's look at the 4-hour here. I'm going to go full screen now, by the way. So like we said already, guys, the daily candle, all I wanted to do is close over 65,500. It'd be nice if it closed bullish, but we'll see. We look at Ethereum in a second. Just 65,500 is the key right now. The weekly candle as well. Just want to close over 65,500. It's already attempted that several times. Dude, Dennis, when I disappeared, Solana made its move to $190. So if you weren't in it at all, I don't know what to say, brother. I preach Solana every day, all day. Everybody I talk to at the Bitcoin conference as well likes Solana, and they hold some Solana, at least some. So it's like all ages, bro. I talked to this guy that was a trader at freaking Goldman Sachs for like, I don't know. He said forever. Like the guy was there for 30 years or something. And he's like, I don't really understand the crypto thing, but I hold Bitcoin, Solana, and Ethereum. And I'm like, so wait a second. You're holding Solana? I mean, come on. That's awesome. Like, all right, I get it now. People do trust it a little bit. So that's good. It's good to hear that. I wish I owned double what you have. Dennis, trust me, you hold probably the most out of all of us. Am I considering heat map? I mean, I just used the money flow profile for a heat map. Let's look at Ethereum. Has my new baby spoken? No. She just cries. Cries for food, right? Like we all do. My goodness. Look at yesterday evening going to retest that low there on Ethereum. NQ down. Remember we saw it at 600 points, down 70 points from that high. It's trying to come off of it now. I do think it could hit 19,400. But I want it to close over this high here, 19,377. 19,3, yeah. I need more conviction at 125 to 130. I don't know why you didn't buy it down there, to be honest. Used to. Bitcoin, there you go. There's that 60K break. I mean, again, guys, 65,500 is it. Like, I don't even care at this point. Just watch it. Watch 65,500 again. Money flow profile. I mean, we were in another high volume node regardless, and we were trading below it inside a breaker block. I mean, I don't. There's not much you could say. Like, if FOMC was going to drive Bitcoin into a bullish setup, it would have had to break 67,500. There was no reason to look bullish on Bitcoin whatsoever with it just holding under 67K. There just wasn't. You had a beautiful change of character, which is from a previous high low. Like, that was a very clean structure shift. Comes down, tags a weekly level, and then immediately rejects back under. I mean, off that breaker. There's a 15% breaker, so it's a pretty ideal breaker with it being a low percentage. I mean, this thing's gonna hit 65,500 again. The odds of it hitting that is just pretty clean. I wouldn't even go past. I wouldn't even like put it up for questioning. You remember what we said though? I think we could maybe go down to 63,500 ish. So another 2K drop. 2K drop on this I think would be ideal for Bitcoin on the 4 hour if it continues. But again, I'm not gonna really be worried about it. Honestly, I'm not going to say it's going to drop that far until we show that it wants to fully break 65,500. Dude, Dennis, then if that's all it is, brother, that's something you can change. Something you can change. Big time. Something you can change. You just got to... It takes time. I mean, it's very hard to change somebody's mind. Very hard. But, like... If that's what it takes, I mean, sometimes you got to do it. I like that potential inverse head and shoulders. We would have to go touch 61,500 as well. But not a bad day, gentlemen. Not a bad day for FOMC. Let me look at gold one more time. Bitcoin, again, downside makes sense on a 4 hour. It just makes sense. Gold breaking, man. Gold is just, wow. Upside target on gold right now would be this daily open close high. 2467. Watch that. 2467. You got to reverse that thought process. Think of it as opportunity. if you don't recall yesterday, one more time.
Who's your daddy?
I literally told you guys yesterday, if we close on this 4 hour over this swing high here of 24.03, we had a very high probability of going to test this open close swing high on the 4 hour and this order block of 24.21 to 24.27, which was coming from a daily open close high sitting right here. And well, you're welcome. If you didn't, if you didn't listen to that, then I'm sorry. You kind of missed out on a very nice gold move, very easy gold move. Gold moves in such good structure. Also, oscillator played so nice. Look at that higher low printing right before that change character and breaking a bearish trend on the oscillator with decrease in very aggressive bearish money flow. I mean, you can't get better than that. Gold right now, again, that upside target again on that daily is going to be right here, 24.67. Watch for that. You got a lot of room up there. Besides that, we talked about downside on gold downside on Bitcoin makes sense for a little bit. Right now on the NASDAQ, the daily, I just wanted to close over 19,377. Great little retracement bounce, guys, right? Still above that high volume node on the daily. I mean, from this current swing to now, 618. Sorry, that was the wrong swing. Let me go to the weekly. Weekly makes more sense. Biggest retracement was here. That was the last swing point it had, right? High volume area as well. Look at the overall 618, 50% retracement, lining up beautifully with the previous high. 618 lines up perfectly on that weekly previous high, like on the nose of that open close weekly high for the NASDAQ. Lines up on the nose of 18,588. That pretty much lined up for the perfect extension, right? That gave us the idea of that up here at 2080, right? 20,800. We would probably get that retracement, which we just got. So the weekly, if we could close where we're at, I think we're just going to probably go retest at least this weekly open close highs up there at 20,500-ish. But kind of watch for the 20,000 break into next week. Let's see if it happens. Overall, great move so far today. Let's see how it closes on the daily. That's going to be super important right now. It's going to really need to close above this 19,377. So watch that. Okay. Strike Israel back again. It determines on this front, on the overall market front. It's going to come down to how the U.S. responds and how other countries respond. You just got to be careful with that. With everything happening right now with, like you said, with Iran and Israel. So keep an eye on what world leaders and how they respond. Like, how does the U.S. respond to that? And how does, the UK respond to it? Stuff like that. It's just, that's what's going to cause issues, okay? So really keep a close eye on that. Guys, I'm going to leave it with you there. I appreciate you, like always, tuning in. If you haven't already, make sure you do follow our Twitter. I promise you are not going to be disappointed with everything we got going on the Twitter. It's going to keep you updated with everything in real time. We are honestly one of the fastest news sources now. We got an awesome team behind this, so go and follow it. Very much appreciate it. We're going to be doing spaces on there soon as well. I will be involved in that, so we'll be doing spaces, hanging out and chatting, potentially at early in the morning with market open and stuff. So get ready for that. FOMC uncut. Rates unchanged, no cut. Predicted September possible, so long as we continue to get good data. All right, good data is key right now to this. So watch CPI, see how it continues. And tomorrow, see if it continues to slow. We got to hit that 2% mark that we've been looking for. Tomorrow, though, remember we have the UK's report at 8:30. And then we have weekly jobless claims. We have PMI for the S&P and ISM tomorrow at 9:45, 10. So it'll be a very aggressive day. And then Apple, Amazon, and Intel. Very crazy earnings. This is pretty much 2 to 4% of the ES and NASDAQ weight is on earnings tomorrow. So it's going to be big Thursday after hours. And then jobs report on 8 Thursday. Pretty aggressive days coming up. So honestly, if you want, take the week off. Come back next week and get ready to potentially have a nice trending week. We'll see. All right, guys, I appreciate you. I'll see you very soon. Have a great rest of your day. And we probably will stream next week. I'll let you know, though. I'll let you know in the Discord when we stream again. It will be soon rather than later, I promise, okay? It won't be much. It won't be longer than a week. It'll be much probably three days, maybe Monday, if not Friday, okay? So I'll keep you updated, guys. I appreciate you tuning in like always. Happy FOMC and stay safe out there. Enjoy the rest of your week.